Well, good evening, everyone. I want to thank you for joining me at a look at the week ahead for the 11th to the 15th of January 2021. I'm Steve Reisner from Top Gun Trading and a member of Hit and Run Candlesticks. Let's go to the next slide. I am an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business, an active trader since 1998, full-time since 2009. I am a technical trader, but I do use limited fundamentals. I moderate for the Hit and Run Candlesticks room from time to time, and I do provide one-on-one mentoring. I'll give you some contact information at the end here. Hit and Run Candlesticks has 2 trading rooms and a piece of software that's absolutely fantastic. The Hit and Run Candlesticks is run by Rick Sadler, and he does primarily swing trading using options, but a lot of people in the trading room will not use options but actually trade individual stocks. It's up to the individual. Right Way Options run by Doug Campbell, and he does more exotic options trades and strategies, and he is probably one of the best options traders out there that I have encountered, and he actually has this great gift to explain it so well that even the novice will understand each of the complex strategies. Finally, we have the LTA scanner that scans through the markets to try to find trade candidates for us. Rick will talk about how to use the LTA scanner every day in his room, but every Wednesday, Ed Carter, the inventor of the LTA scanner, has an open forum for everyone to get familiar with. And now, stick around to the end of the presentation. I have a couple of special offers for everyone. All right, the agenda, we're going to go over the economic and earnings calendars. Then we're going to do a little bit of an overview of the markets and then some trade ideas, both long and short. I want to remind everybody that earnings season kicks off on Friday. All right, here are economic reports. We've got basically nothing on Monday. Tuesday, we've got the JOLTS at 10 a.m. after the market opens. CPI on Wednesday morning at 8:30. I love the petroleum report and trading it at 10:30. We do usually get some pretty good action around there. Again, have to be very, very quick, nimble trader there. We're not talking about swing trades. At least I'm not. Jobless claims and import-export prices before the market opens at 8:30 on Thursday. And net gas, even though it is a green dot here, just like the beige book and the Treasury statement on the Wednesday, I don't believe that they're really all that important anymore. Now, we've got a plethora of reports on Friday before the bell. The two are PPI and retail sales, along with industrial production, are all red dots, followed by Empire State business inventories and consumer sentiment. The last two get released after the market opens, so be careful if you're trading that we get a market reversal either up or down when those are released at 10 a.m. Earnings Whisper says that these are the important earnings releases this week. Basically, look at these 4 here on Friday as the most important. Here are my look at earnings for the week. I clump the before the bell with the after the close for the prior day. So SNX will report after the close on Monday, and ACI will report before the open on Tuesday. They are both in play on Tuesday during the day for me. I don't trade earnings after hours or even before hours. I wait till the regular session happens. And you can look at some of my videos as to trading earnings as to why. But that is not necessarily a good idea. It can rip your head off there. In yellow are the ones that have high short interest of greater than 8%. And if we get a upside positive surprise, they could run like a scalded dog. That could be a nice, good intraday trade or even the kickoff of a longer term swing trade. Let's see if we can pop out of here real quick and look at those earnings. We're going to look at the longs. Sorry. I wanted to look at. Oh gosh, here it is. Oh, okay. Actually, I want to do a market overview first. The hot sectors for the last week or so have been IYT transports, oil holders, semiconductors, energy, XES, XLB, basic materials, financials, XLV, XLY, XME again, energy, XOP, energy, XRT, retailers, and IBB, biotech. So I'm going to go over one of those in particular for us to watch. All right, here are the trade ideas. That's where we want to go. All right, before I go into the trade ideas, I want to look at the overall market using the T22 2122 indicator, 4-week new high, new low ratio. And you can see here marked as a pullback zone and a bounce zone. When we get down here to the bottom, as we did back here in late October, that we are going to get a bounce, almost guaranteed, within a day or two of getting into this area. You can see how when we get down into here, we will bounce. It doesn't tell me how high it's going to bounce or how long the bounce will be, but it does say to be prepared for it not to continue to go lower. The same inverse happens when it gets up in the pullback zone. However, a lot of the times the market will get into this pullback zone, pullback rally, pullback rally, and to zigzag higher. And in fact, that's what we have been doing since about the middle of November. We will pull back as low as, say, the 30%, only 30% making new monthly highs, but we're still going to come back and rally hard the next few days. And that's what we've been seeing. Let's go over to ALEC, our first trade idea here. And you can see we gapped down to about 17 back in, I guess this is August, July actually. Okay, and then we rallied up to 17 once. I think we're going to rally back up here to 17 again. Okay, we're basically doing kind of a rounded bottom breakout. I've done that already. Now we're going to attack the 17. If we attack the 17, there's not a lot holding us back between that and $21 right here. Okay, so I'm going to keep an eye on that puppy. Amcor Semiconductor, again, like I said, broke out. We had a high volume spike back here in July. We retested it 2 or 3 times and actually got through this time. I'm looking for a possible pullback, maybe into the area of $16.5 to even $16, and look for it to curl back up. And if it does curl back up, that would be a time to possibly go long. This is an actively managed ETF, ARKG, ARK Genomic Revolution Multi-Sector ETF. That's a mouthful. I actually went long here on Thursday and sold half on Friday as I got up here to my 108.25 area. That was my first target, was 108 area. I got up in here, I sold. I still have half, so hopefully with the stochastics RSI curling back up here, we'll continue with the breakout here, because genomic research is the way we're attacking the coronavirus and all of the coronavirus type viruses. Okay, next one up here alphabetically is Checkpoint. It was a good buy on Friday. I didn't notice it early enough, but it still has enough legs here, I believe, to at least attack 138.75 and maybe even break out when we get back up there. ESPR, rounding off the bottom here, I'm looking for a break above 31 and a quarter and maybe an attack of the 35 or even $38 level. All right. We're up at the high here. We could pause or pull back a little bit again and then make another go at it. I'd actually love for it to do a little bit of a retracement here, maybe down to about 30 to 28, 29.50, and then go higher. GBT, second time up to this 48.75 level. We have a gap here up to about 52 and a quarter. I'm looking for us to attack that level if we can continue here, or if we pull back and attack it the third time. Third time is really kind of hard for the sellers to continue to hold on. GOCO, GOCO, insurance brokers, they had a bit of a sell-off here in late 2020, but it looks like we're probably going to try to attack 19 and a quarter to 22 and a quarter. Obviously up here to 19 and a quarter in a pullback. Anywhere along here, if it goes sideways, or even potentially do a half a position if it continues to go higher, and allow you to add on if it does a little bit of a pullback. Next is GOS. GOS, I think, wants to go to 1160. That's about 10% move. It's probably going to have a little bit of trouble around this area with the resistance there just at or below the 200 period simple moving average. But keep our eye on it. Maybe you get in here, trade it to that level, either take half off the table or get out all together. KWeb. KWeb did a breakout, second time up. It gapped up over, it kind of jumped the creek here on Friday, gapped up to the level and ran. What I'm going to do is I'm going to watch this for a pullback, maybe to this area somewhere here, and then curl back up. That's what I'm going to be looking for. MCHI. ETF looks like a breakout. China Fund. It's probably not too far gone to nibble a starter position right here, or wait for the move up and some sort of pause or pullback. News Corp. It already did its breakout and now came back down to the 1850 to 1840 level. Let's see that it holds support here. If it does not, we move on. If it does and moves up about, say, 1875 to 1890, we could nibble on a starter position on that one. ODT did a pullback. Looks like it wants to try to hold somewhere in this 1950 level area. If we get above the 2050 area, I think we break through the top here and go on to 2450. Pacific Biosciences, PACB, too far gone to chase it, but what we are going to do is keep it on our radar scope, at least I am, and then looking for that pullback. Anything you hold above 30, maybe 31 to 32, would be a perfect spot to add for that. Jump in. Run. Solars are running a little bit, as we can see with TAN, ETF. This one ran, we broke through the 80, what is that, on Wednesday. Friday, again, another one that's too far gone to chase, but let's look and see what it does. Does it consolidate? Does it pull back? I think with a move this substantial, a pullback maybe to the 86 level or so is probably in the cards. Next we have here on the longs is SDGR, Health Information Systems. It's coming up on its prior tops. The level here, 88.75, and maybe even a move to 97 on this go, or 100. 100 is going to act as a magnet if it gets over 90. So this could be one to nibble on, at least a starter position. Zixi. Zixi trying to form a bottom here, a longer term bottom. If it gets over the $16 level, there's not really much of anything to stop it between that and about $19. So keep an eye on Zixi. Let's go on over to our shorts. And the shorts here, CWS, Camping World Holdings. It's kind of just grogging along here at the bottom, but if we break this $26 level, we're probably going to 24, or maybe even as low as the high teens over here to the left. So one to keep an eye on. eHealth, EHTH, we break down below this level of what is that, $69. A move to 66 and a quarter could happen very rapidly. We do have a little bit of support, possibly get a pause or a bounce, and it is possible to go as low as 61.50. Be advised that stochastics RSI is still pointing upwards, so this could take a while before it does a fail, or it could fail to fail. Not even, and not even trigger us. Next one is FGen. I love to see stocks that go down, rally up to the 17 exponential moving average in magenta there, and then fail. I think we're going to test 37. The downside for this, one, it's in a hot sector of biotechnology. Number two, it only has, about $1, $1.50 to run to the first level of support right here. But if we break through that, 33 and a quarter. So maybe a nibble on this. Taking a flyer might be in the offing if you're so inclined. Next, we're looking at Insmed, INSM. Again, nice solid bottom forming here. However, I think a lot of people are saying, well, this is forming a bottom. Let's see if it can turn around and go higher. Stochastics RSI is giving us a warning sign. It's saying that this might not hold. So if we could get below this 32.75 level, I think the 30.75, a couple of dollars lower, is going to happen pretty fast. And maybe even 27.75. So a lot of it will depend on what we do here. We could get a lot of people trapped on the wrong side if it breaks below there. I don't think I really want to consider this as a long above 35 though. Overstock. Overstock, you can see the 50 period moving average is pointing downwards. The 200 is pointing upwards. We're kind of stuck between the middle. However, on Friday, we had a very strong bearish engulf. A move down to 46.75 is probably in the offing. And as I'm looking back over here to the left, 37.50 or 25 something is probably possible as well. Last on the shorts is Weight Watchers. We started failing somewhere at the middle of December. This little rally up here was a pretty good one. A good place to have gone short. And another one is right in here, although we may have a little bit of support at 22.5, but I think 21 is on the cards. Sorry, that's my dogs wanting to get inside. All right, let's see here. Laser pointer. All right, I said if you stuck around to the end, we'd have a special for you. $49 for 30 days in either the Hit and Run Candlesticks or the Right Way Options rooms. Type in these links and you'll find yourself on the way. If you want to sign up for both of the rooms, it's again 30 days for only $98. If you want to follow me, you can follow me on StockTwits, where I post trade ideas on a daily basis. Top Gun Trading there is where I post YouTube channels, some videos occasionally, and I do have a lot that are in the past. And Top Gun Trading 2 at gmail.com is where you can reach me for any questions you might have, or if you want to inquire about coaching. I want to thank everybody for joining me tonight. And good luck, and see you next Sunday and every Sunday. Take care.